Stop trading support and resistance. In this video, I'm going to be showing you the reasons why you should stop trading support and resistance and what you should be doing instead. So make sure you stick around to the end and make sure you like and subscribe. Let's get into it. Now, there are various reasons why the support and resistance doesn't work. And the three main reasons why support and resistance doesn't work is because of market makers, liquidity, and false information. The third one is a big deal. Now, when I first started trading, I started trading with support and resistance. I started trading like 5 years ago, back in 2020, beginning of 2020. And the strategy that I was using at the moment because I was a beginner, so that was the first thing that I got into was support and resistance. Then after support and resistance, supply and demand, which I found out that they're like the same thing. All right, so support and resistance, I did it for some time. Sometimes it worked, sometimes it didn't work, but I can assure you that it worked. It didn't work most times. Like most of the times, what will happen is I would place a trade at a support and resistance level, price will hit my stop loss, and then at the end of the day, go in my direction. So my direction was right, but it was as if they were targeting my stop losses every single time. It was as if like they'll come to my stop loss to the exact tick, hit the stop loss, and then move in my direction. And that would be very, very frustrating. I think they call those things fake outs, but I'm going to explain what those things mean for you guys. So make sure you pay attention. Also, if you're not subscribed to the channel, make sure you like and subscribe because I'm going to be dropping some valuable information. This is going to be part one. I'm going to be explaining part two of this concept. So first of all, what we're going to be discussing is why support and resistance doesn't work. The first one is because of market makers. Now, you've probably heard of market makers. You've heard of smart money. You've heard of big banks, institutions, hedge funds, all those stuff, right? Me, I just like calling them. You can call them whatever you want. I just like calling them market makers, although there are certain differences between some of them. Market makers, these are the people that move the markets. Could be algorithms, could be big, big banks. But their job is to ensure that the market is stable and also to move the market in the direction that they want to move it economically. So they can't just move it 1,000 pips in one direction. They have rules and guidelines that they follow. And in order for them to move the market, because the way the market is designed, there has to be a buyer and there has to be a seller. Is a basic concept of markets, of the markets, of a trading market. For example, if you go to a market physically to get some stuff to buy, get some stuff to maybe you want to buy a shoe or some things, you can't really buy an item if there's no one selling what you want to buy. For example, if you want to buy a shoe and there's no one selling the shoe that you want to buy, then there's no way you can buy it. If you're on the seller's perspective, if you're selling a shoe that no one wants to buy, then there's no way you can sell that shoe. The same thing goes with the forex market and any financial market that you enter into. For people to buy, for someone to be a buyer, there has to be a seller. For there to be a seller, there has to be a buyer. So if you want to buy in the market, someone has to be selling to you. And if you want to sell in the market, someone has to be buying to you. Now, what market makers do is they act as the liquidity providers, right? They are the liquidity providers. How? So they generate liquidity by getting you to buy and by getting you to sell. Now, if they want to buy, they have to generate that liquidity for them to buy. And if they want to sell, they have to generate the liquidity for them to sell. So the first reason why support and resistance doesn't work is because of market makers. And the second reason is because of liquidity. You can't have buyers and no sellers, and you can't have sellers and no buyers. So in order for market makers to move the markets, I repeat again, they have to create liquidity. Now, the third reason why uh support and resistance doesn't work is because of false information. Now, support and resistance is not what you think it is. It's not some imaginary lines that you keep chasing and keep drawing on your charts every every tick. There's a support and there's a resistance at every pullback and all that. There are specific areas that market makers know to be true support and true resistance. The ones you've been taught online for free are just those are not the real support and resistance areas that you should be looking for. If you are to look for support and resistance areas, there are true support and resistance areas and there are false support and resistance areas. It's on the chart all this while, but you just haven't seen it. I'm going to be explaining that in this video, not in this video. This is going to be a part one and part two. So because of time's sake, I'm going to be explaining support and resistance, the concepts here, and I'm going to be showing you the true support and resistance in the next video. So the way support and resistance is hidden and why you keep trading imaginary lines that you see on the charts. Now, liquidity, how does support and resistance generate liquidity? The fact that we have a lot of people, like support and resistance is one of the most popular, if not the most popular trading strategies out there that you will see when it comes to trading, either Forex or stocks or crypto or whatever. Support and resistance is the basic, is even the foundation, is a foundational concept for any other strategy that you're trading. And that's why it's used to produce a large amount of liquidity because a lot of people are trading support and resistance. So when price gets to a support or resistance level, you can bet that there's going to be a lot of people buying and selling at that level. For example, we have a resistance. Let's say we have a resistance level here, and then price is headed toward that resistance level and bounces off of it. Bounces off of it. I think they say if it bounces twice or three times, it's more valid or something like that. I can't remember the concept. But when you see something like this, let's say you're analyzing the chart, you're looking to look for a trade, and then you come on the chart and you see this is a resistance level that price has bounced off of for a couple of times, and then you think that if price gets to this area again, it should bounce off of it and reverse, right? That is the ideology behind it. And this is a resistance. So what happens is because of there are going to be a lot of people that are going to be expecting this to sell here. So whenever price comes back to this area here, there's going to be a bunch of people selling at this resistance. And if they're selling at this resistance, where do you think their stop loss is going to be? Above the resistance. Their stop losses are going to be up here, like this. Now, because of their stop losses up here, this is the liquidity in form of sales or in form of stop losses. Now, that's not all. There are a bunch of people that trade breakouts, the break of the supports or the break of the resistance. So what they're gonna do is they're gonna set buy stops. Gonna set buy stops up here. So when the market breaks out of this resistance, it should automatically put them in a trade. All right. So we have two orders now. We have buy stops at that area up there, and we also have stop losses. Now we have buy stops and stop losses. So this is, in essence, liquidity located in this area. This is money located in this area. Now, if market makers want to sell, what they're going to do is they're going to take out the liquidity above this area, take out the liquidity. Once you've taken out the liquidity, then they're going to make their move to the downside. And this is what was happening to me when I was trading support and resistance, because I would sell at the resistance here. It would do like it wants to actually reverse and continue back down. And then what will happen is this. And then I'll come back and I see that this came exactly to my stop loss, took me out, and then moving in my direction. Now I got the direction right, but due to manipulation by market makers, you end up losing the trade that you should have won. For the supports, it's the same thing. The same concept happens for the supports. We have a support like this, and price comes to this support level like this. People are going to be looking for buys at this area. And their stop losses are going to be here, and sell stops are also going to be here. What's going to happen is price is going to go there, take out the liquidity, and then make their move up, and then find out that you bought the trade, but the trade went in your direction, but later hit your stop loss before going in your direction. Then you ended up losing on the trade, and then they call this fake out. This is actually a stop hunt, a liquidity hunt, liquidity sweep, whatever you want to call it. Now, this is one of the reasons why support and resistance doesn't work, because of liquidity. Market makers have to take out liquidity in order to make their move. Now, I told you that there's true support and resistance, and there's false support and resistance. What I just explained to you is a concept You just have to be able to find the true support and resistance and the false support and resistance. Now, let me just show you a couple of examples of the false support and resistance. I will explain the true support and resistance in the next video. So make sure you like and subscribe so you don't miss the next video, because this video is already getting quite long. So looking at this, let me identify a few support and resistance zones here, and then you're gonna see the concept that I just explained to you happening here. So looking at this, I can say we have a resistance level here. Sorry, support level there. We have resistance here. This is also this is also resistance down here like this. Let me see, is there any other one? Okay, we have one here, supports down here like this. And we have one here like this. Yeah, so these are just a few support and resistance zones that I've highlighted for you guys to see. Now, looking at this, you can clearly see that what I explained to you is what's happening here. Now, we have this low, and then we have price came back to this place to create this support level. Now, a bunch of people are going to be looking to buy this whenever price comes back to this area. They're going to be looking to buy at the support. What happens? Price comes to this level, gives them a star formation to get them to buy. And then what happens? They take out the stop loss of the people buying, and they enter back in, and they make them move to the upside. If you bought here on the support, price is gonna take you out. The stop loss is gonna be down here, right? Liquidity is down here. Price is gonna take you out and then make it move back up. Also, people that put sell stops here are now trapped in sales. People that put sell stops here, they're trapped in here. Price uses one candle. You can see how they use one big candle to make their move out of that area, and then they never came back down here. So let's move on to the next support and resistance area. We have this area here. We have the first tap, second tap, third tap. The next time price comes to tap that area, people are going to be looking for sales at this area. So people are going to be taking sales on this star formation here. Where is the stop loss going to be? Above the area. If your stop loss is not here, there's a next zone that you can put your stop loss, which is up here. And what happened? Price went to both of them to take out the liquidity. Took out the liquidity here, took out the liquidity here. What happened? Made their move instantly away from that area, back down. And then they never came back. After trapping a bunch of traders in here, they never came back to that area. Also, one thing to also note is there are a bunch of people that trade breakouts. Now, the breakout traders are going to be taking breakouts down here. Now, breakout traders wait for candle close confirmation, right? They wait for the candle to close. So that tells us that breakout traders are going to be selling right on this red candle close here. So you can just draw a line, extend it like that. So basically what we are seeing here is you took sales. Let's say you're a breakout trader. Think from a perspective of a breakout trader. You took sales here. Your stop loss is going to be most likely here or here or here or here, depending on how large the person wants to put their stop loss. Now, it took sales here. What happens? Price puts you in little profit, just a little profit. And then what happens? They hold the position, they hold sideways consolidation for 1, 2, 3, 4, about 3 to 4 15-minute candles, which is 1 hour, for about 1 hour. They hold you in sideways consolidation here. So all of a sudden, price just halts, just starts going sideways. And all of a sudden, we have one big fat candle going back up. And then from that point, they never came back. You can see they never came back to your entry. This is your entry here. Never came back to that entry. They might come close to it. So maybe make you think that, okay, maybe it's going to come back down, but they move away from that area quickly. So you can see they came close to it here, moved away quickly. Came close to it here, moved away quickly. Came close to it here, moved away quickly. All right. So basically, this is a trap. There are a bunch of people that were trapped trading breakouts at this area, and also people that bought in here were taken out. So this this does two things at the same time. Same thing that happens in here. We have people selling here. Their stop loss is going to get hit. Breakout traders are going to be taking buys here. Wait, let me delete all these things so you can see this clearly. Let me show you where breakout traders are going to be buying. Yeah, so breakout traders are going to be buying at this candle close. Remember, they wait for the candle close. Breakout traders are going to be buying here. So draw a line here. What happens? The stop loss is going to be here, here, or here. Now, the breakout traders just bought in here. And then the ones that are waiting for the break of this zone bought in here or here, one of them. All right. So basically, if we draw a zone like this or a box like this is the trap. This is the trapped area. This is where traders are trapped. What happens? Price immediately gives the first breakout traders a little bit of profits. The ones that enter up here are in drawdown instantly. No profit at all. No profit realized. And then what happens? Price shifts away from that area and doesn't come back there. And then your stop loss was anywhere in here like this, you were completely destroyed. So let's move on to another example here. We have this area here. Price came to tap it here one more time, and then people are going to be looking for buys here. What happens? Although this was news, use this wick to take out every stop loss and every sell stop inside this area once. And then what happens? They made the breakouts. Breakout traders are going to be selling in here. Stop loss is going to be like up here. Give them a little bit of profit. Give them profit. One candle came back up, went down again, came back up. And then this is the area that they are going to be selling. This is the area that they're selling. Extend it out. You're going to see that price never gave them the opportunity to get in, to get out of this trade, except for this area here, which they tapped it and then made their move back up immediately. So all the people that took breakouts or took a trade inside this area, that took sells inside this area, are trapped. And then the next thing to do is hit their stop loss, and you know what's happening next. So this is what was happening to me when I was trading support and resistance. You trade the breakouts, you lose. You trade the bounce off of the support and the resistance zone, you still lose. And then before you know it, you've lost and you've blown your accounts. Now, I know there are some of you that are going to be coming at me on the comments saying support and resistance works, you just don't know how to use it, this, that, this, that. This is something that I have personally experienced by myself, and I believe that most of you watching this video that trade support and resistance, you have also experienced stop hunts where they just go for your stop loss every single time and then they go in your direction. You feel like as if market is coming for you personally, but it's not actually coming for you personally. It's because of you're basically liquidity to market makers. They know what they're doing. They know how to get you to commit, to buy, to click that button, buy and sell, so that they can take your money. Now, another way to also spot support and resistance is by understanding Asian range, which I'm not going to be explaining much of it in this video. Those of you that have been following me up on my channel, you already know that the Asian range are also another form of support and resistance areas, right? Where they bounce inside here, take out liquidity here, take out liquidity here, enter back in, induce people to take breakouts here, induce them to take breakouts here, take the stop losses of all of them. So the next video, I'm going to be explaining how I trade the true support and resistance, and I'm also going to be breaking a bit down, breaking it down, showing you my trading strategy and how I trade. And this is a trade that I missed. I would have entered in here. I was asleep. I sent this out to my free Telegram. So if you guys want to join my free Telegram to learn how I trade, and also I'm going to be sending out trade analysis and projections if you guys want, if you're interested in that. And if you want to join the free Telegram, the link will be in the description below, and I'll see you guys in part two. So make sure you like and subscribe, and I'll see you guys there.